When we see everyone selling shares on the bid, they're just market order, get me out on the New York Stock Exchange. That's usually telling us the general public now has reached a tipping point where they just want to get out of their trades. They think everything's falling apart. Usually when you have the first pullback to a key moving average, like if I just go back to the daily chart, when you have a very strong run and rally, one that just shoots up and then you have an emotional kind of blow off phase, when it first drops back to a key moving average like the 50-day, generally it wants to have a bounce and it's going to want to go higher. What it's done is it's pulled back into a support zone, and sentiment is favorable for it to go higher because people don't want it right now. Yeah, silver's doing much of the same thing. It's consolidating, a little more volatile. It is trying to carve out bottom as well. We've got this potential little bit of an inverse head and shoulders. It's trying to build a potential rounding formation here for it to break and pop to the upside. It's nice to see actually silver holding up the way that it is.
In this detailed analysis, market strategist Chris Vermeulen breaks down how gold and silver are preparing for their next explosive phase. He explains that despite recent pullbacks, both metals remain in powerful long-term uptrends, supported by global uncertainty and shifting investor sentiment. Recent data shows that central banks added over 70 tons of gold to their reserves last month, while silver investment demand continues to surge, particularly in Asia. Technical patterns indicate that a major breakout could be developing, with gold consolidating near record highs, and silver showing the kind of coiling structure that often precedes a strong move. These aren't random price swings, they're part of a much larger cycle where hard assets regain dominance over paper promises. The setup is forming quietly, but once it ignites, the move could be historic. If you value real insight into the gold and silver markets, make sure to like, share, and subscribe to the channel, your trusted guide to truth, trends, and timing in precious metals.
When we see everyone selling shares on the bid, they're just market order, get me out on the New York Stock Exchange. That's usually telling us the general public now has reached a tipping point where they just want to get out of their trades. They think everything's falling apart. And it's the same. We have one for the FOMO indicator as well. The markets can rally, and the market can actually have everybody running in and buying stocks, and they don't care what price they pay. And that's the red indicator that I share on my chart when you and I do this. So it tells us when the market is, these extreme of short-term overbought, oversold levels and the panic selling and FOMO, they're just short-term extremes in market sentiment. And they give us an idea. Like today, for example, while most people are panicking and selling stocks, we look at it as, hey, the S&P 500 has pulled back to the 20-day moving average. It's had a nice three-wave correction, or a little bear flag, down to support. It's testing the breakout. It's a gap to the downside, and there's panic selling. And all these things actually say, while everyone's panicking, we're like, oh, this is nice. This is actually like kind of a buy the dip mentality. If you're a momentum trader, this is where you'd step in and look for a kind of, you buy the dip and you sell the rip. So we could see a big pop and rally over the next 1 or 2 or 3 sessions and create this momentum. So that's how that indicator is done. It's just pure volume flow on the New York Stock Exchange.
Is gold still in a super bull market, like you just said? Because like you said, not everyone, but it seems like people are taking profits. We're now below $4,000 again. It's been consolidating around $4,000 since October 25th. So about a week and a half now, Chris.
Yeah.
And it's just waiting for a pullback or a breakout. Either way, we don't know yet. But you're bullish and you're buying on the dip. Why?
Well, I mean, based on a pure momentum play, this is telling us based on the momentum of it in the pullback. Usually when you have the first pullback to a key moving average, like if I just go back to the daily chart, when you have a very strong run and rally, one that just shoots up and then you have an emotional kind of blow off phase, when it first drops back to a key moving average like the 50-day, generally it wants to have a bounce and it's going to want to go higher. This is just, even though it has pulled back and reversed to the downside temporarily, overall, this is just the first pullback within, I think, this major trend. So it's not so much a long-term investment. This is like an active trade. We're looking for it to run up to about 5,100. And again, what it's done is it's pulled back into a support zone, and sentiment is favorable for it to go higher because people don't want it right now. So it's just that support. It's oversold, and the underlying long-term trend remains up. Silver's doing much of the same thing. It's consolidating, a little more volatile. It is trying to carve out a bottom as well. We've got this potential little bit of an inverse head and shoulders. It's trying to build a potential rounding formation here for it to break and pop to the upside. It's nice to see actually silver holding up the way that it is. Sometimes you see it really have some big red bars to the downside. But again, I think they're going to move more or less in sync together. I think the metals are holding up better. They're not making lower lows at this point. They're not breaking the lows from about a week ago. And that's, I think, because they're not connected to the stock market. The stock market is pulling back. Gold miners are stuck in the stock market. And as you and I have talked about, I look at the markets like the ocean tide. When the tide goes down, all boats go down. So if the stock market tide is going down right now, and you got a gold miner that's stuck in that tide, it's naturally going to have more pull to the downside. Whereas gold and silver are a commodity, they're not even connected to the stock market. And so they're holding up better because they don't have that falling tide with the mass psychology of everyone kind of dumping stocks and selling. So I think gold miners are telling us what the sentiment is. People are panicking, they're selling and moving out. And I think it's telling us, and gold and silver are holding up. So I think it's an emotional pivot low. And I think we're going to see the market carve a bottom out if it's not already in for gold and silver here. So this is 2007 stock market top. The yellow line is gold. What I find interesting here, and you and I have touched on this, is the stock market was making an all-time high back in 2007. Gold, the yellow line, was pushing up to all-time highs. And then finally, we started to see the stock market struggle a little bit. Gold started to pull back. I kind of believe we're in a similar situation in terms of price action. We've got gold pulling back. There's a little bit of fear in the market, very similar to what we saw just over here in 2007. And what's interesting is if we look on the left chart, I've layered in multiple different assets down below. So we have GDX, which is gold miners. We got silver, platinum, and palladium. And this is what I've been talking about for the last little while is everyone's been piling into gold. It became a short-term crowded play, which is why we've got this initial little pullback. But you can see that in this chart. When we look at what people have been doing with gold miners, with silver, with platinum, and palladium, money's been moving into this space. So whoever's open to the concept of holding physical metals, they have been piling in. It's been a little bit of a feeding frenzy. Things got a little overbought. When we look at what happens after this, we tend to see the yellow line, gold, shoot dramatically higher, rallies about 30%. The stock market ends up struggling. So I think money pulls out of stocks. Money's always looking for a return. So it's going to move to whatever's got momentum, which is gold. It's also going to be miners. It's going to be silver, platinum, and palladium. So that's kind of where I think we are right now. If we look on the similar chart of where we are, you can see if I was to just kind of move 2007 back, we're in a very similar situation. All of these assets have come to life. It's become the crowded play. We're having the first little pullback and pause. And then I think we're going to see gold in the precious metal space shoot higher fairly dramatically. I think gold's going to go to 51, 5,200. Silver is going to shoot higher. I think that's kind of where we are. We're right in this cusp of just the last month or two where I think gold and the precious metal space have one more big run. And the big question is, does the stock market stall out and the money coming out of equities, does that get pushed into precious metals to create this giant rally? So that's what we're just kind of waiting to see. Yeah, I think it is a combination of things. Obviously, the jobs number is a little negative. I think the two banks coming out, kind of two of the biggest banks, kind of when it comes to people giving analysis from those banks, they were bearish. So people listen. Although you got to take it with a grain of salt. It's, pretty high level stuff. A 10% pullback over the next 2 years is not a whole lot to go off of. We kind of have we have a 10% correction every year, if not larger. So I think the markets are a little frothy. When we look at the charts over the past couple of weeks, really, we saw a big pop. We saw a couple big gaps up on the NASDAQ. We saw the Magnificent Seven breakout. We've seen the stock market really have some. I'm not a big fan of price charts when they have gaps. So if I was to share my chart here, I'll show you what I'm seeing here. Now, if we take a look at the SPY, and this is the same with the NASDAQ, we had resistance through here, and the market loves to gap above or below resistance levels or support levels. So it gapped above it, and we've got this gap window. Then we had another big move higher as it broke out. I think a lot of people were watching it. They jumped in, and it's created this momentum. And gaps tend to get filled in the market, David. And so the market has come down, and now it's trying to fill this previous gap and test this breakout level from about a week and a half ago. So this is a perfectly normal move in terms of how the market unfolds. We saw a pullback, we saw a little bit of a bounce, and now it's pulling back into support. The thing is, people today are actually really nervous. This is Tuesday as we're speaking here. we actually have some panic selling in the stock market. It's not like a huge sell-off, but our indicator here, when we look at the stock market tools that I use, we actually have some panic selling going on in the market. So I have this panic selling indicator in this top, this green indicator here. Typically when it gets over these levels and this blue line, we usually see the market put in a low. So we had panic levels hit over here. We had panic this morning at the open as we were talking. We're starting to get back into a panic territory. Typically after that, we see the market kind of rebound. The other thing from a short-term analysis is we have these lime green bars. And if we were to zoom back on the chart, lime green bars are typically seen as an oversold market condition. It means the market's sold too quickly to the downside, and usually bargain hunters come and step back in. So the pullback that we're seeing is completely controlled. It's very normal. Yet for some reason, investors are panicking today. They're dumping shares. That's what this indicator tells us. On the New York Stock Exchange, there's 3 people hitting the sell button to every like 1 person hitting the buy button, meaning people are dumping shares on the bid. They don't care what price they get out. They just want out. And when 3 people are running for the door to every 1 person who's waiting to buy, that tells us there's short-term sentiment shift. So really, the markets still are in an uptrend. This is nothing more at this point than just a pullback. And we're just kind of letting the markets kind of correct after this.
The markets are quietly building pressure beneath the surface, and the signs are too clear to ignore. Gold's strength during global uncertainty shows that confidence is shifting not out of fear, but out of understanding. Investors are beginning to recognize that this isn't about chasing quick profits. It's about protecting purchasing power as the next phase of financial reality unfolds. Silver's recent price action is equally telling calm on the surface, but structurally preparing for a breakout that could redefine its role in the economy. As patterns align and momentum builds, one thing becomes clear: the transition to real assets isn't coming. It's already underway. The noise of short-term corrections hides the quiet accumulation that precedes historic moves. When the charts confirm what the fundamentals have been signaling for months, it will already be too late to catch up. If you value foresight over fear, make sure to like, share, and subscribe to the channel where truth, timing, and precious metals meet.